Hi, everyone. Thanks for joining us today, and welcome to the Global Finance Clinic. My name is Tina, and I am a solutions architect at Airwallex, where I help businesses operate better globally. So, if scaling internationally is on your mind, then you are at the right place. For many businesses, expanding into new markets creates real upside. There's more customers, more revenue, and more room to grow. At Airwallex, we conducted some new research based on a survey of 1,600 finance leaders across 12 major markets and found that for many, global revenue is actually one of the dominant drivers of the business. 15% of companies now generate more than half their revenue internationally. 58% of companies now generate more than a quarter of their total revenue outside of their home market. But what often gets missed throughout all this growth is that it can also come with hidden financial drag. And this doesn't usually just show up as one huge line item. It shows up as small leaks across the system. Foreign exchange, card acceptance, vendor payments, settlement, reconciliation. While each of those may seem manageable on its own, together they can quietly erode margin and create a lot of manual work for operational teams and finance teams. And we'll be sharing this report with you in the next couple of weeks as well, so you can see where your own finance setup may be leaking time or revenue. But for today, what we're going to do is make those leaks visible. My goal for this session is simple: help you spot where money and time are slipping out of the system today and show you what a more unified setup could look like. So in terms of the agenda for today, we'll be going through a couple of things. First, we'll talk about the self-diagnostic test that we mentioned in our email and what we want you to do with it. This is not mandatory, so if you didn't bring anything, don't worry. And then we'll move on to 4 leaks that we want to call out very operationally that may be hiding in plain sight. Third, we'll talk about what it could look like to operate more globally while remaining like a local in those markets that you are operating in. And then we'll hear from Lidia Cabrera, who is the founder and CEO of OmniVillas. OmniVillas is a company that has worked with us to make some of the changes that we're going to discuss today and has saved over $100,000. So we'd love to hear from her on what that was like. And then we'll quickly end with a demo and open it up for Q&A. Okay, so to make this practical, we asked you to bring a couple of examples. A recent invoice sent from an international customer, the number of legal entities that your company has and where they're located, a recent bill from an international vendor, plus the payment receipt if you have it, and a recent corporate card statement with international usage. Your corporate card terms would also work for this as well. You don't need to share these with us. This is really just for your own self-diagnosis. So as we go through each area, I encourage you to compare what I'm describing with what is in these documents. And if you do see any of these leaks, then it's a sign that there may be a better way for your business to be operating. Okay, so we'll start with part one, the 4 leaks hiding in plain sight. So a very common setup is this. It's a company that's selling internationally, but still operating as if it's a domestic business. And this overarching diagram will help you visualize your money flows as we go through the details. On the left-hand side is how you think about your payments coming in. So the revenue that you're generating, how you're collecting from your customers. On the top is payment processing. You can think of that as your card payment collection. So when people pay you using MasterCard, Visa, Amex, etc., as well as any local payment methods. And then on the bottom is your external invoices. So these are like bills that you're sending to your customers with a specific bank account that you have, asking them to wire funds in. That's on the collection side. On the right-hand side, the payout side, you want to think about the vendors that you're paying out. So how you're paying them, usually also wire transfers that you're making to them, as well as if you have corporate cards for you and your teams, and what that corporate card setup looks like. So I'll be going through these 4 areas in that order. The first is payment processing collections. So one question to ask here is, how are you asking your customers to pay today via payment processing? Are you always asking them to pay in your home currency? So is that always US dollars? If the answer is yes, then in many cases, your customer is the one absorbing the FX on their side. And while this is not a direct fee to you, it can still hurt you. It can create friction at checkout, make pricing feel less transparent, and ultimately reduce conversion. Some businesses do take that step and you let your customers pay in your local currency, and that is a better customer experience. But then the next question to ask is what happens to those funds after they are collected? So a lot of the times, those funds will settle back to you in your home currency. So if your customer paid you in euros, pounds, or Australian dollars, you might still be receiving US dollars from your payment processor. And you might think that this is a good thing because it consolidates all of your foreign collections into one. But that really means is that there's a currency conversion happening in the background at a rate that is not working in your favor. Most traditional banks charge a 1.5 to 3% margin on top of the real exchange rate. And you don't always see this as a fee. It can just be baked into a bad exchange rate in the conversion itself. So that's the first leak. You may be winning the international customer, but losing margin on the way in. Now let's talk about businesses that are invoicing your customers. If you brought a recent invoice, take a look at it. What are the bank details on that invoice? If that invoice is asking an overseas customers to pay into a US bank account, then there's a good chance that that is being sent over Swift. Swift is where a lot of hidden costs and friction can creep in. To the sender, the Swift transaction costs $25 or more charged up front. And then that transaction gets sent to several intermediary banks, which all have their own deductions. So it's actually very hard to predict how many intermediary banks a Swift payment goes through, and as a result, what amount is actually being received. This causes a problem for your finance teams because sometimes it may not exactly match the amount that they're billing for, and it creates a lot of requirements for manual reconciliation and a lot of confusion. Because it's also going through those intermediary banks, it's also very slow payments. It takes 1 to 5 business days for a Swift payment to be received. This is much slower than a local payment payout, where it takes same day, 1 to 2 days at most, meaning that you could be receiving those funds sooner and using it as working capital. So this is a classic finance leak. It's not only a cost problem, but it's also an operational problem. Now let's flip to the payout side. Most growing businesses have international vendors, contractors, and partners to pay. If you brought a recent bill from an international vendor, take the time now to look at it. What was the currency that the invoice was in? How was it paid? Did it go over Swift? What fee did you pay? And how long did it take to arrive? And this is another place where companies discover the hidden tax on global growth. Many international vendor payments likely carry a transaction fee and FX spread. Now, you might be the one paying that $25 upfront for that Swift wire. And your finance team may have vendors reaching out to them because they didn't receive the right amount after all of those Swift intermediaries, which creates significant operational drag. And the bigger issue is that this doesn't just happen once, it happens every month across dozens or hundreds of payments. So what may look like a small cost per invoice can turn into a meaningful margin leak over a quarter or over a year. This is an example of a real wire receipt that we found. And you can see on the right-hand side that this wire was charged 18 AED, which is already a significant amount of the actual transaction itself, as well as a foreign conversion fee that likely was not favorable if you looked up the actual foreign transaction exchange rate on that date that the wire is sent. Okay. And the fourth leak is cards. If you brought a recent corporate card statement with international usage, scan through it now. You may see explicit foreign transaction fees, or you may not see a separate fee line, but still notice that an exchange rate that was used was worse than the market rate on that date. Standard business cards often hit businesses with a 2.5% to 3% international transaction fee when paying a global vendor. And that's one layer of leakage. But there's a second layer that's even more important, which is the unnecessary round trip FX. So for example, your business collects revenue in euros, and then your current payment processor is converting that back to your current USD bank account and hitting it in USD. If your business is selling in euros, it probably means that you have vendors in Europe, and you probably need to be making business trips out to Europe or have local staff in Europe that need to use corporate cards. So essentially, you are spending later back in euros and paying out that in via a corporate card, which means it's a double conversion from collecting in euros, settling in USD, and then converting it back to euros later for your corporate card payments. Even if each individual conversion may have seemed acceptable, your business is giving up significant value every time money crosses currencies unnecessarily. We also pulled up some examples here of real corporate card terms. You can see here that there is an additional 2 to 2.5% fee on top of the exchange rate that they're charging here, as well as for those in the US, this is probably a very common structure that you see in your credit card statements. You'll be able to pull that up and see an explicit foreign purchase transaction of 3%, for example. Okay. And there are some companies that already understand these problems well. And their answer has been to build local infrastructure market by market. That means setting up local entities, local bank accounts, local payment providers, local cards, and local partners. Our research shows that businesses with over 250 million in revenue are far more likely to manage 4 or more entities at once. And that approach can reduce some of the direct FX leakage, but it creates a different problem: operational sprawl. Now, finance teams are managing multiple entities, multiple banks, multiple providers, multiple logins, multiple reconciliation flows, and multiple reporting outputs. So instead of one obvious leak, the business ends up with a significantly more complicated system. When we looked into this, we found that finance teams are losing too much time to repetitive tasks, with 53% of organizations dedicating at least 16 hours every month, averaging 20 hours total, reconciling the same transactions across different systems. And while 86% claim that their tools are integrated, only 38% actually had fully automated data flows without manual steps. And that is why this is not just a payments conversation, it's really an operating model conversation. So to recap, neither extreme is ideal. Scenario 1 is a domestic setup that's stretched far too globally. And scenario 2 is a patchwork of local providers in every market that increases operational costs. And this is where Airwallex can come in, allowing you to operate globally like a local. Airwallex is an AI-native financial infrastructure engineered for global scale. We use our technology to allow businesses to operate anytime, anywhere. As of our last evaluation in December 2025, we are currently valued at $8 billion, and we process more than $266 billion of volume annually. And we do this through our licenses that we have around the world, as well as our financial institution partners that we have around the world. We are backed by the world's best investors and are trusted by over 200,000 businesses each month, including Xero, Zip, Shein, Navan, Qantas, and Rippling. And how we do this is really through our financial infrastructure at its core. Um, and our and the key to that is in the middle of this diagram here, which is our multi-currency wallets. Essentially, you can think of it as one bank account being able to hold many different currencies. And into that multi-currency bank account, we support cards, local payment methods, and bank transfers. And out of that multi-currency wallet, we support card issuing and bank transfers. This is a more simplified version that aligns more closely with what we've been talking about. And you may think that this looks very similar to the single setup that I showed in the beginning, and it is meant to, but as I go through this in more detail, you'll see that features within each section allow you to operate like you've set up a local infrastructure in each of these countries that you're operating in without actually having to. So with Airwallex, you can go global in 200 plus countries without ever onboarding more than your US entity with us. That's 200 plus countries that you can transfer funds to, 160 local payment methods, as well as 20 different currencies to accept payments in. So to go back to the leaks that we were talking about earlier, I want to touch on how Airwallex addresses each one. So first is the customer collections leakage. As I mentioned, Airwallex supports 160 plus local payment methods for online payments acceptance. And that matters because you're able to meet customers with payment options that are familiar to them in that market, rather than forcing every customer into the same payment experience. Second, we support like for like settlement in 20 currencies, which means that you do not have to collect in one currency and immediately settle in another. You can receive and keep your funds in that same currency instead of forcing a conversion right away. So our answer to leak number one is this: let the customer pay more locally and let the business keep funds in the currency when that makes sense. Leak number two was the invoice and inbound transfer friction that I mentioned. So with Airwallex, you can create global accounts, which you can essentially think of as virtual account numbers in 70 plus countries and regions, and receive funds through local clearing systems. So that means you can provide your customers local receiving details instead of always asking your customers to pay a SWIFT. You'll be able to receive more guarantees on the amount that you'll receive without these SWIFT intermediaries and reduce your finance team's reconciliation frustrations. And all of these payments go into your single Airwallex multi-currency account, not a separate account per currency. Leak number three was expensive and manual vendor payouts. So we support payouts in 120, local payouts in 120 currencies, which means these are local rails that allows your recipient to receive funds the same day or next day at a fraction of the cost of SWIFT. Our payouts are usually free. We sometimes do charge if we deem your business to have a high volume of payouts, but even then, most payouts would cost under $1. And speaking about leak number four, which was the corporate card FX leakage, with Airwallex, you can issue unlimited multi-currency corporate cards with 0 international fees and 1.5 cashback on USD spend. We also have a very unique value proposition for cards, where if you use it internationally and you already have that currency in your multi-currency wallet, we will automatically deduct that currency from your wallet instead of forcing any FX. So for example, if you have a lot of customers today paying you in euros, if you use our payment processing, then that will land in your multi-currency wallet in euros. And when you use your corporate card in Europe, there's no conversion happening. We'll recognize that that transaction is happening in euros, deduct from the euros in your wallet, essentially eliminating any FX. So this essentially allows you to collect, store on your account, and use a foreign currency without ever having to incur any FX and without ever needing to set up a local entity. Lastly, I want to talk about the operational drag problem as well. If your business is more of the second scenario that we talked about earlier, with the multiple entities in multiple different regions, then the leak is not just one fee or one transaction. It's the fact that your finance teams are forced to manage too many disconnected tools, entities, accounts, and workflows just to run the business internationally. With Airwallex, your finance teams would only need to manage one set of reports, one central bank account, and one set of logins. If you do end up needing to convert currencies, you can do so directly in our platform. For most major currencies, we only charge 0.5% on top of the interbank rate, compared to the 1.5 to 3 that you can expect from traditional banks. So in summary, Airwallex helps businesses collect, hold, convert, pay, and spend globally with less fragmentation, so you can operate like a local business in multiple markets without ever needing to build a separate financial stack in each one. With that, I'd love to invite up Lidia from OmniVillas to kind of talk through her experience doing some of these things. Hi, Lidia. How are you? Oh, you need to unmute yourself. Yeah. Try unmuting again. Hi, can you hear me?
I hear you
Oh,
very
I can hear
well.
you as
Thank
well. Well,
you. Of
thank you. Welcome to the webinar, and thank you so much for your time.
course.
I want to start off by asking, for those who may not know OmniVillas, can you tell us a little bit about the business?
Sure, of course. Well, hi everybody. My name is Lidia. I'm the CEO of New Villas. OmniVillas is a boutique luxury vacation rental and property management company. We help owners with distinctive houses turn their properties into professionally managed vacation rentals. So we are operating right now in four different continents, and we are receiving or handling more than 500 reservations each month. We run the business with a lean technology driven model because operating across many countries require clear systems and good control. And because we're global, finance is a big part of our business. We collect payments, pay owners, pay local vendors, taxes, and team members in different countries and currencies.
Awesome. Thank you so much. And I know you kind of mentioned it in your answer as well, but just to spell it out, in your business, what are the typical money movement involved that you think about day to day?
There's a lot of money movements, and this is especially because we operate in different countries. So, at the basic level, we collect money from our guests, and then when they book the stay, that is the money that is coming in. Then we have money going out through the payments to our owners or the local vendors, contractors, referral partners, and on site staff. Then all this includes cleaning. I put in my notes maintenance, repairs, guest service, supplies, taxes, and other expenses. So there is a daily spending by our local teams also because sometimes they might need to purchase something before the guest arrives or replace something in the property. So our main challenge is that each property is almost like its own small business. Each property has its own income, expenses, vendors, owners reporting, and sometimes its own currency because of the operation international. So for us, it's very important to track everything clearly at the property level. That is why strong financial structure is so important for us.
Yeah, thank you for sharing that. And I know you experienced some friction with this before Airwallex. Could you tell us a little bit about what you were using? What were the biggest pain points that
Things
started
that
to show up as this
I
year?
know. Things that I don't want to even talk about, but I will do for you guys because we went through so many things. Before Wallex, we were using different providers. We had Chase, Stripe, and Wise. That worked very well in the beginning, but as we scaled internationally, that was not manageable for us. One of our main pain points was reconciliation. We were collecting payments, as was I was mentioning, from hundreds of reservations, and often in different currencies. But then our teams had to figure out which payments belong to which property manually. So with a few properties that was okay, but then it was really hard. So we also had a lot of foreign exchange costs because every so opening a bank account is not as simple and not practical to uh, open it in every single country that we operate. So money was collected in a foreign currency and then converted into the US because we had a US bank account. And then that was when we were paid. But however, when we had to pay the owners, the vendors, or the local staff, we had to convert those US back in the local currency. So we were converting money twice. So that was disaster. Disaster. When we were spending around 5 to 7% in each FX international booking fee. And with Airwallex, that is zero now. So that is a very nice thing, and I'm very thankful for it. Payouts were another big issue. At first, we used international wires through our bank. but they were slow, manual, or sometimes did not arrive on time. Then we started to use Wise, which was a little less expensive, faster than banks, but it was still manual. And our high transactions amounts sometimes created accounts reviews or restrictions. And when you're paying, let's say, 50 plus owners around the world, you cannot just type payments manually. It was just not something that was working out. So um, these were large amounts. So we had to review, or I had to review them because I could not give my personal main bank account details to somebody. So it was on me to triple check to see everything that was just too much. Also, we had local staff using their own personal cards for property expenses. Then we had to collect the receipts, review them, reimburse the person, and assign the expense to the right property. It created so much work, and it was just not ideal for anybody. So I think it was the complexity of everything together. Reconciliation, FX cost, lack of visibility, and too much manual work.
Yeah, no, thank you. Yeah, I think even with three good providers, I think as you think about matching transactions between those systems, that takes a lot of time. And even from a contracting perspective, you're a small team, and I think getting rid of some contracts and when they renew and things like that, I'm sure was helpful. And I think that what you mentioned about the cards was really interesting too. I think some businesses don't have corporate cards that you mentioned was your case before, which is sometimes even a lost revenue opportunity because there is cash back or rewards that you can be getting on those cards as well.
Yeah,
Which
yeah, you can feel my my pain maybe in my voice, whoever is listening, because we had to go through every single process until we found the perfect solution.
Yeah, no, that's a perfect segue. Would love to hear about what are the different Airwallex products that you are using today, and how it solves some of those problems.
Yeah. Well, we are using Airwallex more or less 2 years now. Um, so you will hear why I feel relieved. Because today we use several products. Um, um, One is global accounts. We use this to open unique bank accounts details for each property. So now we have bank accounts in each property and in that property's currency, which makes reconciliation so much better. Um, then we can receive, hold, and pay the funds in the same currency, reducing the FX transactions from 5 to 7% to zero. Also, another product that we use is global payouts. This is also super helpful. We can now send money to the contractors, referral partners, tax authorities, and owners in the right currency using their local banking system instead of international wires. So the money arrive almost instantly and as lower cost. And talking about those global payouts, I'm especially thankful to the APIs and the approval workflows in Airwallex, because now all the payments flow automatically from our property management software going to the payouts queue and then simply get approved before they are released. So much better for me to enter them manually. That was also nice. And we also are using Airwallex Spend instead of asking our local staff to use their personal cards for company purchases. They can just use a company card with spending controls. So this is so much better for the team, and it gives us more control over their expenses. The receipts are also much cleaner because they can be uploaded into the Airwallex and be assigned directly to the property that they correspond. So overall, Airwallex helped us move from a fragmented finance setup to a more controlled and scalable system, I would say. Thank you, Airwallex.
Thank you for sharing that. And yeah, I think you mentioned about the global accounts, which are the virtual account numbers that I mentioned earlier. Thank you for bringing that up. I think I'd mentioned in my presentation that you can open virtual account numbers in any currency, but I think what you touched on is that you can also open up as many as you want, like more than one in each currency too. So if you have two
Exactly.
properties in Europe, you can open up two different Euro global accounts, and then you can know which funds came through which global account and be able to reconcile it from your property perspective.
No, it's incredible. For me, I don't know if for every single business will work as perfect, but for me, I'm telling you, from what I went through this, every single thing consolidated in one is just from heaven. It's just I'm amazed. I'm glad. I just can only talk good about it and recommend it. So I'm very happy.
We appreciate that. Good segue to end, which is, you've obviously had, as you mentioned, more than 2 years of experience managing all of these financial flows for your business. What advice would you give to other business operators similar to you or finance leaders who are scaling internationally and may not realize, what's happening?
I would say to not underestimate the cost of complexity. Um, when you scale internationally, money can leak in many small ways. The wire fees, FX rates, money reconciliations, too many systems, or I don't know, uncontrolled staff spending, etc. So first, I would say consolidate your vendors when possible, because many providers become complicated very quick. It's just too much. Where you cannot consolidate, I would say choose a system that can talk to each other and use technology, AI, when it makes sense, to automate workflows and reduce the manual work. I think that is very important. I will also tell that to make sure staff are using corporate cards. That is also for me a big change. Not the personal cards, but then the ones, because otherwise you need to reimburse and go through the whole process that I explained. But that gives you a better control and helps you avoid losing card rewards too. Um, and I think take the time to compare costs. I would say talk to as many providers, vendors that you might think they will help you, and see if the fees and FX rates make sense. For OmniVillas, in those 2 years, we saved more than 100,000 in direct savings since we started. So it makes sense. Little things, you think those are little things, but it's a lot of money. It's big money. So I would say that small
Yeah.
changes compound. Yeah.
And that doesn't include, I think, the time that you have now,
Exactly.
free
Exactly.
time to not having to reconcile. So, yeah, awesome. Thank you so much for sharing. We really appreciate you being here. We're so happy that you're happy with the product. And so thank you so much for sharing your experience.
Yeah, I'm available on LinkedIn. Whoever needs help with to talk more into about this into details, to share my experience. But yeah, I'm very happy and I can only recommend it.
Awesome. Thank you so much. Really appreciate your time.
Thank you.
Okay. Um, let me, okay, great. So now I'll pull up a quick demo of our products. Give me a second to just log in. Um, and kind of go through some of the features that Lydia mentioned, that I mentioned throughout the conversation today, so that you can kind of visualize what it would look like. Okay, so this is what when you sign up with Airwallex, and you get approved, this is essentially what your login would look like. And the example that I'm giving here is Scaling Travel Co. They are a company, they're a travel company. They're scaling global very quickly, operating in more and more countries, finding vendors in more and more countries. And you can kind of think of them as they're using Airwallex to support them in that from a financial perspective. And I'll go through, obviously, on the right left-hand side, you see we have a lot of products. But I'll go through some of the key ones that directly correlate to what I've talked about and maybe what Lydia's talked about, just so you can look at what that looks like. So you'll see that we've landed on the wallet page, and this is the global multi-currency wallet that I've been talking about. You'll see that this account has available balances in all of these different currencies, which means that they're holding all of these currencies with Airwallex. And I'll mention that Scaling Travel Co. in this example only onboarded with us once, right? They onboarded their US entity with us. So they don't have, let's say, a Hong Kong entity or an Australian entity, but that's not stopping them from depositing funds and holding all of these currencies with us here. You'll see on this section, there's global accounts. These are the virtual account numbers that are active for each currency. So you can see here, there's two. There's another easy way to kind of just see all of them, which is if you go into the global accounts section, remove that filter, you'll see that, this customer has all of these global accounts with us. And if I open one, you'll see these are the local routing numbers that you could be sharing with your customers to ask them to pay funds into. And to them, it would just look like they're sending funds, in this case, to like another Hong Kong bank account. It would be via local rails, and it wouldn't be subject to SWIFT fees, even though it can also still accept, in this case, a SWIFT transfer as well. We allow you to quickly copy that as a message to send that to whichever customer you'd like. And you're not subject to just one per currency, as I mentioned. If you want, for example, this person already has a USD global account, but maybe I'll just open another one. You'll see here it's very easy if I want to change it to example, Travel Co. United States. You create the global account, and that's it. It's an active global account. You can view it, and this is the new routing information that's new different from the other USD account that you saw. That helps with reconciliation. So you can send this to maybe in Lydia's case, it was a different property that she was using this new global account for, so that she can understand which funds are coming in for which property, which was very important to her. That's on the funds inside. Of course, if you use this for payment processing as well, those funds settle like for like into this multi-currency wallet as well. I know I quickly talked about transfers out too. You'll see here, assuming you have contacts that you add, you can basically add any of your international vendors here. They'll provide you with those bank details, and you'll find the local rail and add them as a contact. And then from there, you can also create very easy transfers. Here, create a new transfer from an existing beneficiary. So let's use this consultant, for example. And you'll see that, you can send money to this vendor, this consultant, in ACH, in USD. You can also switch it if you want to use New Zealand dollars. Then we would do that and would calculate an FX rate for you that's very favorable. And this person, I know this is like a USD example, but you can do this even if your business was registered in Australia, right? For example. And if I do it, you can create the transfer. You can add a reference that shows up in their bank statement when they receive it. And that's all you need to do, really. It'll send the transfer and give you a transfer confirmation as well as a receipt. Yeah, and then you can download the transfer confirmation if you'd like. I'll click done here. And then I want to lastly show how easy it is to create cards with us once it loads. Okay, so this person already has a couple cards, as you can see. I know Lydia mentioned as well, you can set specific limits. This example is like per week limits or per month limits, just to ensure that your employees aren't going over. There are some more detailed card controls as well that I could show you, but you can quickly see all of the different cards that you have associated with your wallet. And again, if this card goes to, I don't know, into Australia and start spending, we'll catch that you have AUD already in your wallet and just deduct from that, instead of forcing any FX. So to create the card, I'll just give a really simple example, which is like a company card. You add it to an existing contact, which you can import from, your local system or any of the other providers that you might be using. We could be integrated with them as well already. You select a card purpose, you add a nickname. And yeah, you can make the card single use. These are the card limits that we mentioned. These are the options in terms of cadence. You can add multiple limits, and there's some advanced controls as well. So if you wanted to make the card only active for a certain amount of time, you can set that here. And you can limit the card to specific categories. So if you only want them reimbursed or I guess being able to spend your money for restaurants when they're traveling, then you can just click this. And if they try to use their card somewhere else, it will get declined. As well as you can set per transaction limits if you don't want them spending, let's say, more than like $100 per transaction. And there's some more details here about if you want to disable or enable international transfers and online transactions. But a lot of this is optional. You can ignore some of this on the bottom and just create your card. Oh, I guess I should type a card limit. And from there, the card will create. You'll be able to see, I think the example that I created is this one. You'll see that it's been created. You can share this with Savannah in this case. You can view the card details here. You can freeze the card, unfreeze the card, do all of those things. And if you do want a physical card as well, I select a virtual in this example. But if you select physical, it'll kick off our backend to send that physical card to Savannah at this address. Okay. That's all I wanted to show from a demo perspective. Thank you guys so much for joining. I think Caitlin is going to stop the recording now and we'll take any questions if there is any.